All right. Good morning, everybody. Before we get into the change in market conditions that are signaled this morning, it's really important mentally that you understand that when fear takes over in the market, as we continue to watch the market go lower as I'm talking, you can't fade moves like this. Now, this doesn't mean today there's not going to be an opportunity to be long the market or short the market. Just there's a major change in the way the market's going to trade today. But you cannot fade, you cannot get long as the market gets weaker and weaker. Market changes, momentum changes to the upside. Certainly there's going to be more momentum opportunities, and you can trade on the long side. So implant that in your brain right now. Do not fade weakness, do not fade strength, momentum. After the morning meeting is over, take a lot of time to stare at the price action in early August to mid-August. What you'll see is the type of volatility we had at that time is a little bit different than the volatility we've experienced over the last few weeks. That type of volatility, where the market's moving 4 to 6% a day, the SPYs, is momentum. Above key inflection points during the day long, below key inflection points during the day short. When the market becomes weak, when the fear gets in there, that's when you get the momentum increasing in both directions. We don't look to hold trades for longer periods of time. We can hold trades for longer periods of price, but that movement happens in shortened periods of time. You need to absorb these things. You need to write these things down into note cards, and you need to learn them very quickly. The market used to change on a yearly basis or every 6 months or every 2 years. The market now changes, it seems, on a monthly basis, and you have to mentally adapt to that. And if you can do that, you can be rewarded by what the market has to give you. Looking at the price action for the last month, there was a lack of belief as we came off the bottom that we could grind higher and higher and higher. Now in everyone's mind, I think at the most part, everyone's like, wow, we're in a slow up-grinding market, and you've got to change that. You know, yesterday we were signaled a little bit in the weakness into the close. It was almost like someone knew something was going on in Greece, and lo and behold, we gapped down 2.5–3% this morning. Notice from the time that you came in this morning, you said, wow, we're gapping down a couple points on the SPYs, maybe I'll buy this. We've already come off another 1.5 points. What comes into play today with this increased volatility are the 119.30 area to 120, which were the next major supports where we consolidated about 2 weeks ago. Open up your mind and understand that the market is going to have much bigger ranges now. The market is different. That's why we're going to talk about some of the ETFs before we talk about any side as we continue lower. Let's take a look at the VIX. VXX, here's the ETF that represents the VIX, which is a measurement of volatility in the options market. Very quickly, we've gone from 36 in the VIX now to 46, right back up into this area here where we failed on October 19th and 20th. This is going to be a good intraday stock for you to trade today, especially for the less experienced guys for an ETF. You can see it's been trending up very nicely in the pre-market. It's accelerated to the upside now with the accelerated move in the downside in the market. The next ETF I want to take a look at is FAZ. This is the inverted 3XXX financial. As the market was moving higher, was trending down very nicely. Here's a change. It's gapping above this downtrend right now. This is another one that should be pretty good today. It's a threshold stock, so if you want to trade it, be able to trade on both sides, you have to request that it be located. Here's today's price action. Gapped higher, started to move sideways with support in the 43.70 area, breaking to the upside now, up about 70 cents off of the low of this consolidation area right here. Triple leverage, so it's going to move 3 times the financial. So if the financials move 1–2% today, or 2–3% today, you're looking at a 6 to 9% move in this one. 9% on this one is it's a pretty nice size move. TNA, triple leverage small cap. This one was grinding higher, big gap down today, takes us to this 41.70. Again, level's not as important in the triple leverage because they reset usually on a daily basis, but believe it or not, some bigger players actually do look at the levels over the last few days. It appears that this 4180 below here, you're looking at some pretty nice downside, probably about 3 points or so on this one. Open your mind, understand the moves can be much bigger. Looking back on the SPYs, here are the moves right here in early August. I don't know if this one's right, actually 120 here, but let's take example August 9th. The overnight lows were around 108. We peaked out that day at 117.50. That's almost a 10-point move in the SPYs from the overnight low to the closing high. 2 days later, 112.33 to 118.70. 6.5 points on the SPYs. These are very big ranges. When the market breaks a steady uptrend like this, changes things, bigger moves, 120 is possible today, 119.30 is possible. If something happens in Greece to resolve the situation where they say they're not going to have a referendum, unlikely, but if that does happen, we can be at 125 in a heartbeat. In a heartbeat. You have to be aware on days like today of the chirp, the news that comes out. You don't want to panic, wow, what's the news, what's the news? Listen to what's going on, communicate on the desk, don't get excited, stay calm, and listen to what's going on. Be prepared to get in and out of the market over and over again to protect your risk. A couple of stocks that had fresh news. Before I get into the fresh news stocks, if you have stocks that are setting up against recent support levels, whether they be a C or an FCX, bigger market type stocks, for example, 37.95 through this 38 level here, we're below that level right now. Stocks that are getting up against longer term support, recent support levels, and they get below them, those are great trading plays when there's more fear in the market, when the market becomes weak. Very well defined risk, a lot of downside, people hitting the panic button, people stops getting hit. Those are really good setups. Start combing the market, putting them in morning ideas, and looking for those particular setups. EXEL, not particularly good news here. Gapping down, we saw it gapped up the other day. Actually broke out, I guess, a little bit yesterday, and now we're right back down through the low. We know what this means. All these people who got long here are caught. Here's the multi-year on it. So here's our 5-year. We're right down here at the lows from early October, and the next support area is around $4 a share, and then below that, $3. With the weakness in the market, people being trapped today, it's a candidate to go down and close at the low. FST, this one reported after the close yesterday, weaker than the market already. Another good candidate to go down to $10 a share. The low here on October 26th was $11.20. We're below that right now. What you can do is on these stocks that we're looking at, you can put on small positions on a bunch of different stocks, and when the ones start working, figure out a way to add to those positions. That way you stay involved. You get a feel for all of these things that have potential to move today. I highlighted a few seconds ago some of these market things. FCX was one of them. This is a stock that was really good when the market became weak and started moving lower, and came up nicely with the market again. So this is one that I would take a look at again. Here's today's action in the pre-market. See, is trending lower with the market. Appears that this 38.40 area is where it tried to support a little bit earlier this morning. We're about a point below there now. And if it pops up like it has a tendency to do right on the open, this would be an area where I'd be a shorter of the stock. Probably be looking at a stop above this 65 cents up here. Another thing is to understand when stocks are breaking to the downside or the upside, when we have this increased momentum, if you're looking to get in the direction of the most recent move on a retracement, you gotta let the stock breathe a little, meaning you have to let it retrace. FCX weak goes down to 37.60. Can't get excited. It's at 37.90. I'm going to short the hell out of this now. It's a retraced. Give it a chance to pop back up to 38.20, 38.40. With this increased volatility, stocks will retrace larger amounts. As long as they're above or below key inflection points for that day, and you want to trade on that side of the stock, give them a chance to retrace closer to those levels. C is another one that I like to highlight because it's one of the financials that people were making money in over the last couple of months, more so than like a BAC, which kind of sucks. And JP Morgan's okay sometimes, but it seems like there was better money in C over the last couple of months. So right now, looking at it, it's right back down to this area from October 18th, 19th, and 20th. This 20.25 seemed, let me go to a 30-minute on this one. Okay, so you can see this one, it's below the support area here. But again, if the market pops back up on the open, you have a very well-defined consolidation range from this 3-day period here, which was between 30.50 and 30.25, and we could see if that maybe pops up into that area right there. Going back a little bit further, here's the 1 month on this one. Below that, it looks like 28 is our next support area today. So if the market continues to melt, 28 would be what I would be looking at there. I'll quickly check back in with the market to see what we're doing. And so we're still firmly implanted in the downtrend. The pre-market. Looks like possibly we spiked up to this 122 here. I'm not sure if this is real. Yes, it is. So here's the 1 minute. So we have our pre-market low at around 120, 140. And so here's what I look for in the open. And this, that's fake? Okay. So it got to around 90 cents. So here's our range right now, around 120, 190, down to around 121.5, spiked below there. What I found on these days where we've had a lot of weakness right on the open, I'll try to get short below that pre-market low, and if it doesn't work right away, meaning if we take out the pre-market low and we're not 20 to 30 cents lower within a minute, there's a good chance that they're going to play this game where they pop it back up to the top of the range, maybe even break it through and pop up here to 122.60. So be very careful about this short down in this 121.40 to 121.50 area, because on a short-term basis, even if we're going to 119.30 today, tomorrow, or the next day, there's going to be some people who will step in, and a point up move in this level of volatility is not that big of an up move in the SPY. I'm going to sign off. I'll send everyone the morning game plan with the things I mentioned in about 5 to 10 minutes. And important thing here is to remember market conditions have changed, and sorry, you have to adapt more quickly than we had to 5-10 years ago. But if you can adapt more quickly, there's just, in this type of market conditions, there's a lot of money to be taken out of the market every single day, and you don't have to hold things for 30 minutes or an hour. You can be in and out every 5 or 10 minutes and just take advantage of the change in direction and the change in momentum. You're going to trade a lot more shares. Normally the people I have to scold and talk to about overtrading, you can get away with overtrading now. So just get in there and hammer away. That's the type of market that we're in. Good luck today, everyone.